Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the desk at the Nasdaq market site, we have David Wachsman, founder and CEO of Wachsman, as well as Saahith Pochiraju. He's portfolio manager at Superstate. We're here to discuss next steps with the Genius Act stablecoins and the future of payments. It's great to have the both of you with us. David, welcome back to the show, and certainly a lot of news, important news coming at us in the digital asset space with the Genius Act making some headway here.
No question. I mean, I think it's really an important time right now in the United States. Going through Congress is probably the only piece of legislation we're going to go get passed in this administration, at least if we see the political headwinds kind of the way they are right now. And the Genius Act, were it actually to be signed into law by the president, is going to give some real clarity to stablecoins that are going to be issued, produced, and used in the United States of America. To have a regulatory framework that allows stablecoins to be issued perhaps by banks and by non-bank institutions, it'd be a real win for American consumers. And it turns out, I think it'd be a win for the financial institutions too.
Yeah, and I would agree here, Saahith, if you think about it, this is going to give unprecedented access to people around the world to be able to invest in our treasury markets, in our equities, and so forth.
Yeah, we're really excited about this at Superstate, especially having a tokenized treasury fund. We've seen a lot of growth in stablecoins, the AUM of stablecoins over the past year to date, and with that, we've seen a lot of subsequent inflows into our treasury funds and other products that we're trying to tokenize on chain. So we're very excited about the Genius bill and future prospects for crypto assets down the line.
Does it make it more accessible and tradable and more liquid to be able to access these different types of asset classes through either a stablecoin, or if you're thinking about tokenization further down the line?
Yeah, definitely. 75% of our treasury fund and our crypto carry fund are in stablecoins, and transacting that on a day-to-day basis is almost seamless. We love that it's programmaticable. We love that we're easily able to kind of swap between trading parties, different counterparties, investors. So we're very bullish on the Genius bill and the kind of future of where this product can go.
Yeah, I mean, you're seeing it in the press announcements that come out, the amount of investments that are even from traditional finance market infrastructure providers going into this newer space here. I think that's encouraging because we're seeing the capital markets evolve in real time.
We saw $2 billion get invested from MGX, which is an Abu Dhabi-based tech investor, $2 billion via stablecoins into Binance, the world's largest exchange by trading volume. And that was done using World Liberty Financial's USD1. It's remarkable that such a thing could happen today. It couldn't happen 5 years ago. But what we need in the United States is some sort of really clear set of rules that allow stablecoins to exist in the United States, because stablecoin providers should be going public like Circle. Take a look at what's going on in the stock market right now. Maybe the last 24 hours haven't been so good, but we saw an extraordinary performance. This is one of the best IPOs that's happened in years on Wall Street. And what's the benefit of this? Well, we have a stablecoin company building things in America, and I think it's going to be good for the US dollar.
Yeah, and we saw that where there was somewhat of a brain drain when there was no hope for a framework, and you certainly want to bring that back. Other regions around the world certainly accelerated with their development in this space, and I think one thing we get caught up with as U.S. investors or more Western-centric thinking is that this underlying infrastructure is used by billions of people around the world who don't have traditional banking opportunities or can't access the U.S. markets, or they're building micro local economies using this technology.
No, it's really revolutionary in different markets. India, Korea, there are a variety of different payment users that can really benefit from the technology. And we're really excited not only for the payment system, but also for future assets down the line, the ability to get tokenized stocks, the ability to invest in US treasuries, really bring in US dominance with US treasuries kind of down the line.
Well, it's a wonderful Trojan horse, right? Once you built a digital wallet that can accommodate a stablecoin, that same wallet can probably take a tokenized equity down the road, or some sort of tokenized money market fund, or another sort of structured product that could be really interesting. And putting that in the hands of billions of people around the world is a net good. But I want to add one more thing. 95% of the stablecoin market right now, 95% are denominated in USD, US dollars. So as stablecoins grow, and if they continue to grow at the pace they have, all we're seeing is more and more usage of US dollar equivalents all around the world, including in those countries you just named.
Yeah, which is interesting because that mitigates the de-dollarization argument as well, which was kind of bubbling to the surface over the past couple of years. How do you think it impacts traditional payment networks? Because we're starting to see some partnerships announced. MasterCard was a great example this week.
No question. MasterCard is trying to make it easy for stablecoins to be used. We've also seen similar announcements from Visa in recent days. And you have to wonder why they're doing it. Is it because they're threatened by stablecoins? I think these companies are led by smart people who are opportunistic. And I don't think they're trying to stop the issuance of stablecoins. I think they're trying to embrace it because they know it's simply better tech. And they see it, stablecoins and traditional payments kind of merging together over time. And I think that's why you've seen some of the best crypto engineers join these companies. They've got really good intentions, and I think you're going to see more and more partnerships, just as we've seen this week with MasterCard, between big crypto companies and these large payments firms.
Yeah, I think we also have to exercise some patience too, where the transition is not going to be instant.
No, just similar to your traditional finance, I think the transition is definitely going to take some time, but we're most certainly hitting a precipice when it comes to the Genius Bill and the changes that have happened over the last 5 years. It was interesting to see with crypto ETFs and the approval there, that really de-risked the asset piece of the crypto sphere. Now with the Genius Bill, it's very fascinating to see de-risking of smart contracts and transactions. And I think that is going to be a big push to kind of allow Visa, MasterCard to be able to utilize stablecoins. That and also the use of abstraction within these payment networks, I think will really increase stablecoin AUMs over time and improve this crypto RWA.
It's just interesting to see how the infrastructure conversations over the past 12 to 18 months have evolved. And it was encouraging that we saw products come out underneath the ETF wrapper, but it really felt as if the Genius Act and getting the administration behind it was the catalyst, because until that happens and there's a framework and you understand how to operate within the US, you can't grow it at scale.
Listen, there are a lot of companies that are sitting on the sidelines that have the technology to be able to provide for the infrastructure. And so the technology is effectively there. It's really pushing over that regulatory framework to get it to the next level so it can get in people's hands and AUM can kind of grow.
You need to understand your operating environment, right? I mean, and to Saahith's point, we had an announcement this morning where you're seeing major investments, DTCC, Citadel, Virtu. I mean, those are all the big players in traditional market infrastructure. So they're seeing value there.
These are the biggest trading firms in the world. The most important, of course, Depository Clearing Corporation. We see these incredible firms who have been investing in the digital asset space. I think that stablecoins are just a Trojan horse for the rest of the RWAs. I agree completely. It seems like once people get behind this, taking US dollars or dollar equivalents, tokenizing them and using them, people are going to see it's simply better tech for, among other things, clearance and settlement of any asset.
Yeah, well, it all comes down to user experience at the end of the day, right? You want to be able to get to A to B without having to think about it, right? And I feel like that's, how the conversations have evolved. And I would argue, at a number of the conferences that we were at together last year, that's where you saw, no longer the ethos of us versus them. How do we integrate this, and what does the user experience look like? Because we can be nimble as smaller companies, but we do need larger companies and government support to scale.
This morning I was talking to the former editor-in-chief of one of the biggest trade publications in the crypto space. And I think he was a little bit sad at kind of the end of the original cypherpunk movement in crypto. That there's been such an embrace from traditional banks, financial institutions to crypto, that the old days are over. Well, I agree. I think the old West is over, that now it's California and Hollywood for crypto, and kind of that's the new normal. We've got mainstream adoption, it's here now, and yes, it means that maybe user interfaces are a little bit too simple. Well, you know what? I'd rather have that.
Yeah, well, it's interesting. We were at Consensus this year, and for the first time, they had panels around tax and leveraging that kind of technology, and not just financial services there. You saw a number of policymakers come into town in Toronto as well. And once you start hearing these conversations and the practical applications outside of finance, in a more digestible way, I think it's another sign that it's turning the corner.
Yeah, tax, back office, all of these are extremely important pieces when facilitating a product like a stable coin, tokenized treasury fund, et cetera. I think the companies kind of need to come together and really figure out what are those pieces when it comes to taxes, et cetera. And there's been a lot of progress on that in the past 4 or 5 years. And so really, as soon as we kind of get a clear regulatory framework, which is really seeming to happen with the Genius bill, I think we'll kind of see really hyper growth after.
Are there concerns that you're still hearing from the financial services perspective in terms of adoption?
Yeah, it's really just integrating into existing systems. And so if you are using system A for a long time and you go through a process where changing it is very slow, it's always difficult to add in a new system. But we have seen a lot of progress over the last 3-4 years in which existing financial institutions, larger banks, et cetera, are integrating blockchain technology, other product suites around blockchain technology. Yeah.
What were some of the themes that you heard from Permissionless this morning?
Well, I think people were talking a lot about regulation in the United States. And one thing we heard is that just because there might be more pro-crypto regulators in office now, doesn't mean that some of those regulatory frameworks have yet fully been baked. It takes some time between someone being installed in the office and then eventually rules being created and then disseminated. So we are going to see a bit of a lag effect there, and I think that actually is also a reason why we might see more of a bull market, let's say in Q4 or Q1 of next year, simply because it's going to require that much time for the clear rules to be in place for the giants to step in with both legs.
Yeah, I think part of the challenge is to, with Genius heading to the House and its own version of the bill called Stable, the challenge is, and this has been from day one, is who regulates what. And I think that's going to be, a key hurdle that it needs to. I mean, is it CFTC? Is it SEC?
A lot of different parties that have to have a say in what's going on. So I do think it's going to take some time there.
Yeah. So what's next? Let's say, in the next 2 to 3 years, this conversation can look completely different than it does now. I mean, we might be ubiquitous, where we've adopted it in our everyday lives, and you don't even think twice about it.
Yeah, I think easy integration in your day-to-day life is the goal. And there are a lot of different projects and hurdles to kind of make that happen. At Superstate, obviously, we're very interested in this concept of tokenized funds and tokenized equities. And so we really do feel that having more tokenized equities via direct listing will really grow and make it more seamless for being able to use it in whatever account you may have, whether it's your Robinhood account, et cetera. And so we think that that's really kind of going to grow over time.
Yeah, I mean, think about all the products from a traditional sense. I mean, all the indexing that can be built off of everything that's going to emerge from here. I mean, it just opens up a whole new suite of products that investors have never even thought about or had exposure to.
In the same way that hot dog vendors could do better business simply by being around the old trading sites when trading was done physically hand to hand, we're going to see cottage industries pop up that simply couldn't exist a year or two ago in the next 5 years. I think it's going to be big business for those who build the picks and shovels for the crypto space, because we're going to have the regulatory clarity for that main industry just to skyrocket.
Yeah, it's so interesting that you bring up, former paper trading, of which I started my career in. But when you saw in the late 90s and early 2000s how electronic platforms were developed for retail investors, they had more tools than even we did on institutional desk. So perhaps this is the next iteration of that.
Retail-led innovation, that's fascinating.
But I mean, the retail platforms that are available on mobile. I mean, no one was thinking of that at the time. So this could be the next iteration of it with this particular asset class.
Yeah, definitely. I mean, we're seeing so many things pop up in DeFi in different magnitudes, right? Different lending markets, different trading markets. It's really been fascinating. A lot of it has been led by retail DeFi users, a lot of core crypto users. So it'll be exciting to see as this institutionalizes more what happens, how they build within this space.
Which is interesting, and you know this by representing fintech firms. It's not the institution telling you this is a product that you need. It's what consumers are demanding and how they have built product around that.
Indeed. We've seen so many companies try and build it and say they will come, but they don't. At the end of the day, it's demand-led. But I think there's going to be a lot of demand for the financialization of everything. And I think that at the end of the day, that's the core thing that DeFi is trying to do. Financialize everything, whether it's the rehypothecation of assets in a clean and rapid manner, whether it's lending with the very best possible rates because you have a huge pool of people, borrowers on one side and lenders on the other. I think we're going to see this remarkable change happen, and indeed, this is likely to be retail-led.
All right, appreciate both of your insights. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.